The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 25th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. You almost caught me there, right? And put in a radio show question, if you could, inside that subject heading line. And, of course, inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. Welcome to the show. So we've got a mixed bag out here as we begin our day. You've got the Dow off 185 points, S&P's up 2, the Nasdaq's up 40. Not really surprised that the Nasdaq's up, not just because of Google. You've got the DAX trading the upside, and those two directionally, for the most part, trade in the same direction out there. The Russell's off 13 points. The trannies are down 238. The semis are up 9. Composites up 59. New York Stock Exchange down 78. Our leaders in the clubhouse, by the way, to the upside, you've got Charter Communications, a $35 move, VeriSign, a $22 move, Equinix, $19, Comfort Systems, $19, and Tesla's up $18. To the downside, it's Saya Inc. They're off $98. That's a 27% move. Kinsale Capital down $73, 15% there. Aon PLC, $34, nearly 10%. Appfolio down $33, 14%. T-Mobile off 10%, $26 move. So we've got some movers and we've got some shakers. Where do we want to begin? Let's begin with the New York Stock Exchange Advanced Decline Oscillator. The Advanced Decline Oscillator yesterday got to the extreme overbought condition. The closing price of that oscillator yesterday was at the plus 231 level. Once you get above plus 150, you are in overbought territory. So the question just is really, how is that overbought territory going to be dealt with? Are we going to have, if you take a look at these white boxes here, are we going to have a Advanced Decline Oscillator that moves lower with price moving higher to sideways out there? I don't know. It's going to take a few days for us to figure this out. Or are we just simply, like the last time that we were up at around this level, that was back on the day of July the 16th, we just simply saw price make a beeline, in essence, to the downside, form an A to B equals CD pattern to the downside. I don't know the answer to that, but this overbought condition needs to get itself worked off, and it should do that over the coming days. So that's one thing to be paying attention to. At the same time that is happening, though, and here's where things are really starting to get very odd. You've got the spot VIX index that right now is trading just below the 50-day exponential moving average. The 50-day is printing out at 2630. We're printing at 26 in the spot VIX index. So now we are coming out of contango. If you look at the top portion of my screen, you'll see the VIX at 26, the 3-month VIX at 2628, the 6-month at 2656, and the 1 year, we haven't gotten out of it completely. The 1 year is down at the 2552 level. But if we did get price at close below that, what that would then do is that would take each of those indicators, and that would then suggest to you and I that bottom that came in on April the 7th is a significant bottom. And it could be a very significant bottom out there. So something that we most certainly want to keep in mind. How will we know? Well, because we'll see other levels of resistance fail. What do you mean other levels of resistance? Well, you can start with these levels of resistance, and those are coming from the daily equity future contract. So not until, for example, the ES Mini is able to close above where the sellers are at, that's at 57.73, will the ES Mini know if it's out of the woods or not. In the case of the NQ, price is trading into the sell zone right now, but it really requires a close above 19,685. The Dow, a close above 42,836, and the Russell, 20,5440. Now, if we look at the very bottom panel of our screen out here, this is counting consecutive closes higher, consecutive closes lower. If we do close higher today, that'll be the fourth bar to the upside. Typically, it's 2 to 4 bars to the upside before price would then pull back and do its dance steps, its cadence, if you will. So we'd be looking for a 2-day pullback to either begin today or on Monday. So we could see a higher close today, which suggests that Monday and Tuesday could be a further move lower out there. So here we take a look at the 4 daily equity future contracts. You can see they all have bottom patterns. They're all trading inside of their daily profiles, and they're wide ranges out there. So that's one thing to be paying attention to. What else on this set of charts here? Let's just go down and take a look at some intraday stuff here. Let's take a few moments, take a look at our multi-time frame charts. It's not gold. We'll come back and take a gold. I've got a number of gold questions out there, so we'll probably do that first. But I want to try to just kind of keep somewhat not bouncing around too much. So let's take a look. Let's do our work and take a look at the intraday charts for the equity future contract. Specifically, let's look at the ES Mini and then the NQ. And what we're looking for here is any kind of a top or bottoming signal that we want to be paying attention to come day's end or intraday, really. And so I'm just waiting for these charts to populate. My apology for that. Now, the ES Mini on the daily time frame, you can see it has not been able to get up just yet to that sell zone. That begins at the 55.85. We're printing out at 55.15 as we speak. So the 240-minute chart shows a 4-hour time frame TD9 count pattern that was negated. That's a bullish signal. So the pattern that's identifying the top out here, and this is the one to be watching, is going to be coming from our 2-hour time frame chart. And the 2-hour time frame chart for the ES Mini has got a nice TD9 count top that most certainly worked. And when I say it worked, it took price right back to support, which was its bullish structured profile. It's like we're looking at the daily time frame chart, but it's really a 2-hour time frame chart that has the same or a similar profile, a bullish structured profile. So the buyers that were lined up between 54.85 and 54.93, sometimes referred to as the buying the dip, you can fill in the adjectives there. Out here is, they held. Now, the question is, will resistance hold? It's going to be the seller's turn. And the seller's turn, they're lined up between 55.27 and 55.32-ish out there. If price is able to close above that, it's going to go target that TD9 count top, and any close above that high, which would be 55.53, would be a bullish signal. Likewise, on the ES Mini, if price were to close below 54.85, that's always a possibility. That's the bottom of that bullish structured profile. Then we would see lower price. Lower price would likely be 53.86. So nice TD9 count bottom at 6 o'clock in the morning on April 24th for the ES Mini, and a nice TD9 count top. And that took place at 2 o'clock in the morning this morning. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's try to tackle gold out here. A number of questions coming in. We had Tom G. asking about it, Robert asking about it, John inside the Tiger's Den, I believe, asking about it. So let's start off first because of the directional correlation or inverse relationship that we took a look at earlier in the week between gold and the U.S. dollar index out there. It seems to really be in full swing right now. Now, you've heard a number of people on the financial news media talking about the death of the dollar. I have no clue what the Sam Heck, and I was going to use a different word, but I can't use that word. I can use Sam Heck, though, on the podcast. I have no clue what they are looking at out there. The dollar is not toast. The dollar's been in a sideways consolidation since July of 2022. You're looking at this is a quarterly time frame chart that we're looking at. And so at this stage, what we know is the dollar made it to the bottom of that consolidation. Is it ready to make a move up to the top of the consolidation pattern? The answer to that question lies in whether or not the U.S. dollar index closes above the top of its daily profile, which is printing out at 100.15. If price closes above that for 2 consecutive sessions, then we would have a profile change in trend, and I would say that the bottom of that consolidation held, and now we're going to see a rally with the price target over time. It's a quarterly chart, that bottom right-hand panel that you're looking at, moving back towards the top of the consolidation. We've simply been in a consolidating pattern for the U.S. dollar index. Anybody who says anything different is ignoring what the charts are saying. So that's one element, and I don't know what the answer is. Now, likewise, if we take out the lows of the U.S. dollar index and we continue to head lower, now we really have to take out the bottom of that consolidation pattern on that quarterly chart out there. So that's the first element. What's another element that we want to understand that's going on with gold? Quite frankly, technically speaking, and that is what's gold doing in the major currencies. So the very left-hand panel chart you're looking at is it priced in U.S. dollars. So we can see gold is moving lower in all currencies today. So that's not a bullish condition. We don't have, one country that's a buyer, one country that's a seller, so to speak. Priced in euros, we're trading below the lows of the week out there. Priced in yen, we are not just yet. Priced in pounds, below the lows of the week. In loonie, we're testing the lows of the week. We're testing lows of the week in Krona. In the Yuan, we're starting to trade below the lows of the week. In the Aussie dollars, the same thing. And in Swiss francs, we're just testing those lows. There's really a couple points that I want. So first, we know that gold is trading lower in all major currencies. So no reason for it to not continue to do so. The top that we have in here, all-time highs, was made on the exact same day. Exact same day for all of these currencies out here. Let me make sure. Yeah, the exact same day. The high was made in all these major currencies. That's a caution sign. You hear me say, look, when it's moving up in all major currencies, that's a bullish signal. It is true when it's moving lower in all major currencies, it's a bearish signal. So it just says right now, be careful. Why does it only say right now, be careful? Because we haven't broken through any key levels of support. We haven't gotten to them yet, but we're going to. If we take a gold priced in all of the currencies, not all, but the majority of the currencies in the Middle East, we have that exact same pattern. The high came in on the same day. So we've got synergy that's going here. Unfortunately, this could be synergy to the downside. So this is huge caution signs. By the way, gold is trading lower. And all these Middle Eastern currencies, some below the, right now at the low of the week out there. So again, as caution of a sign as you can possibly get out here. So it says, be very careful. If we take a look at the weekly time frame chart, what we know about it is we know that price ran right into resistance at a rising price channel. You can see it. This was a rising price channel. It was developed probably a year ago. That's my guess. This is a weekly chart that we're taking a look at because I sure as heck, I can tell you I didn't touch it in 2025. That's for sure. And price ran right up into that level. Now we can also see that on a weekly basis, what also is holding is its horizontal trading range level at 33.29. So since it couldn't close above that, the next area of support could be down at about the 30.95-ish area or that rising trend line. So that's going to be one answer to your question, Ron, about price targets to the downside. We'll give you those profile levels, which I did during the opening of the show, but I'm going to re-give those to you. But here with regard to rising and falling channel lines and horizontal trading range lines out there, that 30.95-ish area does become a potential target. You can't bust them to the upside. Perhaps what's going to happen is price is going to try to bust it to the downside. I don't think there's anything else left on this set of charts for me to take a look at with you. Instead, let's go over and take a look at this chart here. I think it's this chart. Maybe it's this chart. Is it this chart? It is. Now we got the daily, the weekly, and the monthly time frame. We've got the June contract. So what do we know about this week? Well, the first thing that we know is on a daily time frame, this formed a Rhodes Momentum Indicator top out there. So we got a daily top. We are in bar number 8 today on a weekly basis. We are very likely going to go ahead and confirm a TD9 count top next Friday. That pattern will then be completed the following Friday out there. But it can be bar number 8 that identifies the top of the pattern out here. So we've got a topping signal. The monthly time frame, which is when's the month close? When is the 1st of May? The 1st of May on my calendar is next Thursday. So a week from yesterday, the gold contract for its June contract on a monthly time frame is going to complete a TD9 count topping pattern. Now, where I really want to focus in on the monthly time frame chart, let's just simply expand this out, is the cadence, is the number of months. Now, I'm not putting up the continuous contract. I've just got, this is as much data as I can grab for the June contract. And what we can see here is that we can see 2 extended rallies. One, we had a 5-month rally. That was back in July of 2020. And if you look at the very top, you'll see that that was also a TD9 count top. And then what do we see? Well, in that case there, we saw price move lower for 4 consecutive months. Take us to where we're at today. Well, we're going to go ahead and complete that TD9 count topping pattern next Thursday. That we already know. It's already a confirmed TD9 count top. So we've got that. And where are we at? We are in bar number 4 when we have that completion. So it's a pretty solid suggestion based on what we just took a look at with how gold is trading. In all the currencies out there, we're all trading in the same direction at this stage, that we're going to see a pullback. I think what we could see is a 2-month pullback out there. Now, what I will throw out, the one thing that would negate that, of course, anything can negate it. Well, price could negate it. But the one thing that could negate that these uncertain times out here, not tariff schmariff. I think we discussed the tariff piece of it yesterday, and we saw how much the news media is lying to us about what really transpires in tariffs out there. Or at least they could be a little bit more honest and give us the actual factual information of what took place in the 1920s if they're going to compare 2020s to 1920s. But they don't want to do that. But here in this show, so short of some type of geopolitical war event going on out there, then what we should see here is probably a 2-month pullback when we take a look at gold. It's just the normal cadence and flow and pattern. It's like holding your hand overhead. You can only hold it for so many hours before it has to come down. When we come back to this break, let's finish looking at gold here. Let's go take a look at now the other area of just simply where price could find support, and to the extent of the move is at the 32.25, 32.56 level. Around that is the buy zone from the daily profile that formed this week. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we're taking a 30-minute time frame chart for the gold contract. So the questions this morning were kind of long-term, short-term, what is gold doing here? So what do we know? If we take a look at just this lower right-hand section here, we just stay with this for a moment. We know that when prices trade above the oscillator and change line, it increases the odds of a move higher. It is especially true when it's a green oscillator and change line. What we can also know is that when price has capped itself, so to speak, the oscillator and change line acts as resistance. Just take a look at the move here in gold from back at about 3:30 in the morning back on April the 22nd. Price on any rallies, price found resistance at that oscillator and change line until we got to the 2100 hour on April the 22nd. Now look at where we're at here. The oscillator and change line for the 30-minute time frame is holding as resistance. So short term, this is also kind of a bearish signal. Now price is back at a area where price found support, and that's at the 3270.80 level. It was a 30-minute Rhodes momentum indicator bottom pattern out there. What you can visually see is the A to B equals CD to the downside that could form if that low is taken out. Turns out that on the 4-hour time frame chart, it's a TD9 count bottom pattern. So I'll just simply go with that because we've got less noise. It's much easier to see. And in this case here, if price closes below that 3270.80 area, it'll negate a TD9 count bottom. It will trigger an A to B equals CD to the downside bottom pattern with around 3145 being its price target. Now, before price can get to 3145, it has to take out that group of buyers that exist between 3225 and 3256. I don't know who's got the stronger hands out here. But, everything that we just looked at, I've given you everything that I can. You make your decisions out there. The bigger picture, which I'm glad is what people looked at, because when we look at that monthly time frame chart, know that next Thursday we will have 4 consecutive months to the upside, and typically that then leads to some type of retracement, oftentimes a 2-bar knee-jerk reaction low. Would love to see that. And the reason we love to see that is because I can already write the headlines in the newspaper, in the media out there, and they would basically be saying gold is toast. And man, would that set up a ginormous buying opportunity. But whether we get there or not, we just have to take this one step at a time. And right now, short-term support has held. Again, that being the bottoms that we took a look at on the 30-minute, 15-minute time frame chart. So I hope that helps Tom G out with regard to gold. I hope that helps John out with gold, and Richard and everybody else out there as well. So now let's move on to the first request. There were so many requests of this, so it just made sense to just kind of take a look at it. But we did have a request that came in yesterday I was unable to get to, and it was from Yvonne, and it was ticker symbol NIO. So we take a look at this on a daily time frame. It has an A to B equals CD pattern on the upside, and if it were to form a bearish reversal candle, Yvonne, that would generate a Gartley sell pattern. Today's candle, and really a gap to the downside, but it's really just trading inside of yesterday's candle. And as long as it just does that, that is a signal that price wants to move higher, even though it's pulling back today. Why is that? An inside bar typically indicates that the direction that had been in trend prior, as that bar was forming, will continue. And in this case here, it's to the upside because you've got that A to B equals CD pattern. Now, you do have a battle at $4.26. $4.26 happens to be the center of its profile out there. So what you're really looking for is a close above $4.26 that'll get you up to $4.98 to $5.24. The top of the weekly profile at $5.24. $4.98 being the TD9 count breakdown resistance level. So when I take a look at NIO, it is suggesting it wants to move higher. The struggle is at that $4.26 level out there. So Yvonne, thanks for waiting an extra day on that. Hector wrote in, and Hector and Patty, they want to take a look at ticker symbol CRS. So let's go open that up. Let's find that. I think that is right here. It is. And CRS is trading in a nice A to B equals CD to the upside. And that says that a bearish reversal candle, because it's almost attained the 1-to-1 level, a bearish reversal candle would generate a sell to D point top. Short of that, price should make its way up to its TD9 count breakdown resistance area for its daily time frame. And that's at 211.86. And we can see how that has held resistance. It was tested 2 times. Looks like this will be the 3rd third time that it gets tested. And it should get tested. What do you mean, and it should get tested, Stevie? Well, when we take a look at the weekly time frame chart, there is nothing holding this back. And what I mean by that, it appears that we're going to have a profile change in trend signal. That would be confirmed with a second close above 188.33 next Friday. But we're also going to close above, it appears, the green oscillator and change line for its weekly time frame. The weekly time frame also has a Gartley buy pattern, and it formed that with that bullish piercing candle 2 weeks ago. So we're trading into, now the only weakness here, Hector and Patty, is probably volume. The volume on the move lower from the week of March 7th was 6.3 million shares. And so far we are up with, well, it's not bad, 5.5 million shares. Let's do yesterday. Volume yesterday was, so you're still going to probably come in a little bit light in the loafers, but nonetheless, price should go target that swing high. That swing high, by the way, is up at the 187.85. I'll take that back. It's at the 213.66 area. So 211.86 to 213.66 is the likely outcome. Now, granted, the monthly time frame, which has a Rhodes Momentum Indicator top, found support in its bullish structured buy zone, 157.28 to 166.68, but it's also finding resistance at the top of its profile, 204.26. So what I'm suggesting here is that as your pilot, I've just turned on the fasten seatbelt sign because you're up against resistance. Every indication is that it should take that out, but it's going to be a battle. But one thing it's not a clear shot that you're headed to higher highs, not until those topping patterns get taken out, and that requires a weekly or a monthly close above 213.66. So Hector and Patty, best of luck to you on that trade. Hope that helped you out. Tom G wrote in early this morning, in addition to gold and oil, wanted to take a look at NVIDIA. Who doesn't? We take a look at NVIDIA out there. I think you were talking about maybe going short. I don't see that. If we take a look at NVIDIA, it's got a daily TD9 count bottom pattern. Now, price is trading inside its resistance zone. That zone is between 105 even Steven and 112.87. We're trading above yesterday's high. Yesterday traded above the prior day's high. The prior day traded above the prior day's high. In each case, all four of those, and even all four of those also had higher lows out there. Just in the simplest of pattern recognition out there, that says, no, I don't see a short in NVIDIA. Now, maybe when it gets up to the top of the profile, 112.87, maybe that's an area to look out there, because we haven't taken out last week's high as we take a look at the weekly chart, which, by the way, has a Gartley buy pattern out there, and the monthly is trying to get back inside its profile. I mean, it's just by the hair of its chinny chin chin. It needs to close above 109.42 at the end of the month, and we're at 108.89. It is close. So, Tom, do I see a short in NVIDIA? I do not. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So the second question is, do I see a short in Tesla? And the answer there is no. And really just going back to that same old, very simple pattern tool out here, higher lows. Just ever since the April 21st, all week. Higher lows, higher highs out here. And we're trading above resistance. That's at 250.11 on the daily time frame. We're trading into a shooting star swing point on the daily time frame. That formed on March 27th, that is, 162 million shares traded. That day so far, we're at 70 million shares. We're at about a 210 million share day. So we are coming into that swing point with volume. No. Do not short Tesla. Tesla's got a nice Rhodes Momentum Indicator daily bottom. It's got a nice TD9 count bottom on the weekly time frame. The monthly time frame price pulled back into its buy zone between 212 and 243 out there. Tesla is trading above the top of its weekly profile. It closed above 270.11 today. It's another bullish sign, and that suggests that it runs up to the 299.30-ish area. That's its weekly oscillator and change line. If you close above that, you're then headed to 304.62, the top of the monthly profile. And if you get above that, Tesla's all the way back to the 433.20 level. So I do not see the short signal inside of Tesla. Now, this is going to be 4 days in a row to the upside out there. Maybe we get to the 5th day on Monday. And then, of course, we'd be looking at at least probably a 2-bar move to the downside. But otherwise, everything looks pretty gosh darn bullish, and it has set some very nice bottoms, a daily, a weekly, and a monthly out there. So I say be careful shorting Tesla. Let's go take a look at Meta, see what its charts are looking at out here, see if we can find some kind of an entry point. We take a look at Facebook on a daily time frame. It's traded with inside its bullish structured profile. Formed a Rhodes Momentum Indicator bottom pattern on a Monday of this week, on Tuesday of this week. And then Wednesday, price gapped up above the center of that bullish structured profile. So what price should do here is run up to 589.77. This will be day number 4 to the upside. Maybe it's going to have a 5th day. What you'd be looking for here as an entry point, as a possible entry point, would be a 2-bar pullback, one or two bar pullback out there. I'd go with the 2-bar pullback. Now, you got a daily bottom, Rhodes Momentum Indicator bottom. You're going to go ahead and confirm a TD9 count bottom pattern today on a weekly basis. Now, that pattern will complete next week out there, but what price should do is rally up towards the bottom of its profile, or really rally up towards a level where a counter trend move would come to an end, and that's in the 564.60 to 585.28 level. Those are a new profile that formed last week. It formed above price. That in itself is a bearish message, but it has the offsetting TD9 count bottom. So the weekly somewhat neutralizes itself. We don't know what the weekly chart is going to do for us until we see how price deals with, should it get there, to the 585.28-ish level. Though daily time frame chart is saying it wants to do that. The monthly time frame chart is saying it wants to do that. Do what? Rally. Well, this is going to be 3 months to the downside. Basically, Meta should have put in a bottom, a significant bottom, with that daily bottom and a weekly bottom that we see out here. 3 months to the downside come next Thursday out there. That's a pretty good indication that Meta has also bottomed, and we've got price, which seems to have found support at its bullish structured profile, which is between about 538 where we're trading right now and 566.84 out there. So as far as an entry point into Meta, look, if this were to pull back to the 505 level, I know it would be a $30 plus move to the downside. It would seem a little scary. That's the buy zone. I mean, that would have been that's kind of a perfect area. But short of that, a 2-bar pullback would be something that you could take a look at. Let's go take a look at, for McGuppy, CCAP. So let's pull those charts up here, see what we have here. CCAP is trading out at 1607. It had a profile change in trend yesterday. Very bullish outcome because that was a bearish structured profile. We're above that today. All I see out here, a bunch of higher lows, so that looks good. What the daily time frame chart is suggesting, McGuppy, is that it wants to make a move up towards 1778. But if it continues to trade like this, then we should see a TD9 count top that would form in the early part of next week. We're in bar number 7 right now. That says between Monday and Wednesday, CCAP on its daily time frame, if it continues this rally, which I know you'd probably like it to do that, well, you could also be walking right into a TD9 count top. Now, that TD9 count top may be nothing more than a 2-day knee-jerk reaction move to the downside. We don't know. On a weekly time frame, you're completing a TD9 count bottom. It was bar number 8 that made the low there, but you're completing that pattern today. What does that suggest? That suggests that over time, price wants to make a move towards the 1715 level, 1715 to 1749. That happens to be the area where price, if this is just a counter trend move to the upside, and I know you're saying it's a heck of a counter trend to go from 1350 to 1749, the numbers are the numbers. I'm just reading the charts. I am your narrator out here. And so that's the area where price is likely going to go target is a 1715 to 1749 level. If price were to close above 1749, it says ain't no counter trend move. It's a real bottom out there. Monthly time frame chart not really helping us out a ton out there. So it's the daily and the weekly that are really driving things, McGuppy. Your question is this just a dead cat bounce? The daily time frame says no way is this just a dead cat bounce. The weekly says, well, why don't you call me back when we get to 1715 to 1749. I hope that makes sense. It's as much sense as I can make. Let's go take a look at the stocks out here for Duncan inside the Tiger's Den. So give me a moment. I think I may have been able to get that chart flowing here. Let's find out. Did we? Yeah, we got the SOX, SOXX. What this did yesterday and is doing today, this is going to be day number 2 above the top of its daily profile. So, Dunk, what that gives it is a profile change in trend for its daily time frame out there. Nice daily TD9 count bottom that formed. This is suggesting that it wants to make a move up towards 204.06, and that is the TD9 count breakdown resistance area. In fact, if price closes above the high from April 9th out there, and that high is at 185.56, it will trigger an A to B equals CD pattern on the upside. It won't be with volume because that candle had quite a bit of volume. The volume on that candle session, let me just make sure, 23 million shares is an example. Yesterday, 6 million shares. As another example today, 2 million shares. about a 6 million share a day. So it won't take it out with volume, but as long as you get above or close above that level, you'll trigger an A to B equals CD pattern on the upside. We love the monthly chart. TD9 count top. Price gets back to its breakout level. It's bar number 8. Likely that this is a significant bottom out here for the monthly time frame. A nice bottom pattern on the weekly, nice bottom pattern on the daily. And right now, we're just going to deal with some resistance levels out there. But otherwise, the stocks looks like it wants to continue to move higher. So, Dunk, hope that helps you out. The next request was to take a look at Jabba the Hutt. So let's go take a look at HUT out here. HUT is going to generate a profile change in trend today, Sharky. That just simply requires 2 consecutive closes above the top of its profile. Now, it began the journey to the upside when it formed a Rhodes momentum indicator bottom pattern. So now it's going to continue its journey. The journey is going to take you to $14 before you kind of hit the next difficult area. That is the top of the weekly profile. And even if you clear $14, we can look at the monthly time frame chart and see at 1464-ish, because price is going to move up and down on that line, the oscillator and change line. So your next area where price is going to go target is somewhere between 14 and 1460-ish, 1470-ish out there. You clear, let's say, that oscillator and change line in the monthly time frame, then you're looking at $22.66. Steve Rhodes with so stay in that trade. There's no reason to get out of this trade. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're looking at Nordic American tankers. This is for Peak, a G inside the Tiger's Den. Peak, it looks like price going to close above the top of its daily profile today. In order to accomplish that task, you need to close above 254. You're at 255, 1 penny. But if you do close above it, it suggests a run to the 264 level. The weekly time frame chart confirmed a Rhodes momentum indicator bottom pattern 2 weeks ago. You're trading inside its profile. Its next upside target is 264 as well. So 264 seems to be baked into the cards. The monthly time frame chart has a TD9 count pattern that is held out there. You are trading inside its bullish structured profile. It's suggesting it wants to move up towards 303. So that's what I see when I take a look at Nordic American tankers. Next request is to take a look at PPTA. That is for LB. PPTA on its monthly time frame looks very good. It's in the process of gaining a TD9 count top. That suggests it wants to move higher. The weekly time frame does not have a topping pattern. It has a Rhodes momentum indicator signal that's been triggered. That needs a bearish reversal candle. It's in full-blown bullish breakout mode on the weekly, on the monthly, and in fact on the daily, where it traded above profile resistance and its oscillator and change line. So it looks like to Stevie that PPTA wants to continue to rally further out there. The next request was to take a look at ticker symbol GTLB. This is for Greg. Greg, this is trading right now. Put on your seatbelt, because price is trading into a sell zone on the daily time frame, and that exists between the level of 46.22 and 47.40. If you close above 47.40, you're on your way to 51.13. On a weekly time frame chart, you're trading with inside its profile. I don't see a bottom pattern, but the daily, in its next level of resistance, it would be at the 48.51 level. And on the monthly time frame, it's a bit cautious right now because price is trading below the bottom of its profile. You'd love to see it be able to get back inside that. That requires a close above 47.41. Well, we're out of time out there. Nicholas, sorry that I couldn't get to your question I just saw come in. Have a fantastic Friday, folks. Have a wonderful weekend, and I'll see you back here on, Marvelous Monday. Take care and be safe out there. Thanks for all your help this week.